Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of Internal Revenue Code Section 83B election. The 83B election is something common you'll hear about a lot. People when they're at startups or at new businesses and they receive restricted stock units. Let's go through the basics, because while it's generally going to be a great way to minimize tax implications, not always. So Section 83B, right? It's a timing question. At the essence of an 83B election, what's going on is the taxpayer saying, hey, you know what? I'm going to gamble and pay some tax now on the fair market value of some restricted units I received, with the hopes that down the line, hope springs eternal, right? That down the line, you're going to benefit from that by paying long-term capital gain on the growth during the vesting period instead of paying income tax at the time it vests. So let's go through a quick example, okay? Michelle works for company XYZ, and Michelle just started working there. So they go, you know what, Michelle, we want to motivate you, right? We're going to give you 1,000 units, restricted units of the shares. Okay. Now, at the time she receives them, at the time they're transferred to her, this new company is just a new company. They're not traded. The fair market value of the stock's like a penny, right? Like a penny stock. So she says, oh, okay. She talks to her tax advisor, and the tax advisor tells her, you should do an 83B election. And so by doing that, what would happen is Michelle would include the value of the shares, which isn't really worth much, at the time she files her income tax for the year she received the transfer, even though they're still restricted. So it's not like Michelle pays the tax and then she can go off and do anything with it. They're still restricted. So Michelle says, you know what? It's only worth a penny. I'm going to do it. Michelle keeps working there. She's doing wonderful. The company does great. Now these shares are worth $25, $50 a pop. Michelle's like, you know what? They're vested. I'm going to sell them and I'm going to buy a rental unit, right? Put some money down on a rental unit. So here's where the benefit of the 83B election comes in. At the time it vests, let's just say $25, okay? If she wants to sell those shares of stock, her basis is low. Why? Because her basis is what essentially she paid the tax on, which is very minimal. And when she sells it, it's pretty much going to be all gain. But that gain is going to be limited to long-term capital gain. 15 or 20%. I know currently the president's considering changing that rule, but at least for the most part right now, long-term capital gain, right, held at more than a year, is going to be 15% or 20%. Let's say instead Michelle goes, you know what, I don't want to pay any tax now. I don't know if I'll still be here. I don't know if these will be worth anything. And she doesn't pay tax at the time she receives the transfer. Okay. Now down the line, when it's time for her when they vest, she has to pay tax on the total value. The total value is $25,000. The problem is Michelle's moved up steadily in the company, and her net effective tax rate is now 30 to 35%. So the result is, instead of paying 15 to 20% on long-term capital gain, instead Michelle is going to pay 30 to 35% income tax. Now, when she goes to sell it down the line, her basis will be much higher, because if she's paid $25,000 taxes for $25,000 based on the value, then when she sells it, her basis is going to be $25,000. She won't really have any gain, but that gain is at a lower tax rate, so it doesn't really work out. Now, it's not always penny stock. Sometimes those shares could be worth a few dollars, and then the company goes out of business, and if you got granted 50,000 shares, there could be a significant downside to it as well. But for the most part, if you're dealing with startups and new businesses and you get a grant of a bunch of units that are restricted, and the fair market value is next to nil, the 83B election could be a good idea. My name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.